And good morning, everyone. Welcome back to this live market analysis. And oh boy, are things moving. A bit later in the week than normal because of a lot of other obligations I had. But market wise, it seems like today is a good day to stream anyway. So let's look what's going on. European markets getting pounded deep in the red. Asia markets also deep in the red. US pre-market deep in the red. It's no surprise there. Oil not too bad yet. So that's a bit of mixed supply demand things going on at the moment. I hope all my USA friends in the hurricane lane are a bit safe or bunkered up there. Good luck with that. Gold also pretty deep in price. Bonds obviously the thing that are soaring, and well, crypto we don't really have to take a look at. We all know how that is. EURUSD falling through the floor like many other currencies compared to the dollar. So yeah, there's a lot of stuff going on, and it looks like there's a lot of more downside potential there. Quickly scan the headlines. Nothing really new. Obviously, we had a huge event with the Nord Stream being sabotaged by someone, and there's a lot of rumors going on. Who did it? Was it Russia itself? Was it Ukraine? Was it America? Was it someone else? Who knows? Who knows? But it's pretty scary stuff going on there. And this is also for Europe. This is like economic wise a bit of a black swan event, as we can see in the charts. So stock futures, new low of the year. Globalization is clearly over. Yeah, no surprise there. Some people are hiding somewhere, but say they are not hiding. So well, we all know about that disaster. So yeah, it's a pretty shaky market. So looking at the calendar of events, Monday we saw the German business climate being even lower, much lower than expected. Yesterday, durable goods minus 0.2, a bit less bad than feared. New home sales surprisingly up, but I think the price battle is causing a bit of a peak in sales, but that will, next numbers I suspect will be down again. And today German consumer confidence is falling through the floor. Like there was expected minus 39 and actually it was minus 42.5. So that's pretty strong indication of the European economy, because Germany is the strongest economy together with France in Europe. So that's why I'm also looking at Germany and France in these events at the moment. In about 3 hours we get the inflation rates from Germany, and expected is 9.4. So that's pretty bad. Europe is pretty much toast economically wise. We'll take a look at that in the charts. So that's a big one for Europe for tomorrow. And Friday we got a lot of inflation in Europe, in France, and Europe-wide. Europe-wide it's expected to be 9.7. Unemployment rates in Europe, don't think that will be much different at the moment. And US we have the personal spending and personal income, which is expected to be good, but I do have a bit of doubts about that one. So might be nice to keep an eye open for these two on Friday afternoon, 14:13 European time. Let's switch to the charts, and we have the Dixie wrecking ball sending much more pain into the market. We broke above that major resistance zone finally after almost hitting it, and now we completely broke out. Next stop is 120. So if we hit that, that means the DXY will go more than 4.5% up, and that will also pretty much wreck every USD denominated market there is, and pretty much all markets are that. So a lot of pain inside. If we go to a monthly view, we see that this month has been crazy, almost 5.5% up. Here we have that 120 ceiling, but keep in mind in the 80s we also had a crazy run like this, and it went all the way up to 164. So imagine this happening again in the market, then you pretty much can guess what the stock markets, the commodity markets and the crypto markets will do in these events. So this was obviously the big crash in the 80s. So it might feel really high already, but take a look at this perspective and keep that in mind. There is a lot more room for pain in the market. If you look at bond yields, it also pushed up, almost hitting that resistance zone overhead. There's a bit of a pullback, but it's not really going down. It's more like a few days of sideways so far. So that's pretty nasty overall. If we quickly go back to the DXY and zoom in a little, we do see that we are at daily count 7, so we have at least 2 more days of upwards potential before we go into potential reverse zone for a pullback there. So this week will probably continue the same way as it started until now. And also like the bond yields that had a 9 already on the 20s, and it's just been going up. We got the warning signs here indicating a potential top, and now finally momentum is dropping a bit, but so far no real move. Then we have to the really bad stuff for Europe. At account 7, obviously it's inverse of the DXY, so there's at least 2 more days of downwards momentum, and we see that, let me just switch to the monthly view here, that we broke below this oh so important 96 level, that support zone that was formed pretty much at the introduction of the euro here. And that is pretty bad. So the next levels that we should go to is that 88 cents, 89 cents zone here. Was the middle of the accumulation range. So that's another 7.6% to the downside, and then we go to the bottom of that range, and that is around that 84 cents. That's 12% to the downside. And after this, well, we pretty much go to the 70s. So there's a lot of problems in Europe at the moment with the winter coming, obviously, and Nord Stream was closed and now it has been blown up, pretty much sabotaged. So there's no way that will keep flowing. Consequences are quite high because there's a gas shortage. With the winter coming and the gas consumption increasing big time, energy prices are going through the roof, and it's actually causing deindustrialization, great word for Scrabble by the way, where a lot of steel factories and zinc melters have already shut down operations because they just cannot be profitable with the current energy prices, and governments have to make the choice, let people pretty much freeze or stop the industry and the production things. So the next few months is pretty much bad for Europe, especially economically wise. So I think this EURUSD chart still has a lot of downside potential. There's no end in sight. So Europe economy is pretty much toast. That's the summary there. Bitcoin is not doing that bad actually compared to the rest of the markets. Obviously we had this big fake out yesterday, that bull trap that I think a lot of people got liquidated on. But now we're still on the daily chart. Not all hope is lost. We still have these huge bullish harmonics here, and until we break that 18, that was this low exactly, 1850-ish, if we don't break that, we're still good on the daily chart. So crazy wick there on Bitcoin. We do have the volume, warnings here, where there's more than average volume but lower than average absolute candle movement here. That's often a sign of top or a bottom. Like if we go back where we had that a cluster of stars, that was here after this big move, and this pretty much some stars, one more dip, and pretty much started to go sideways from there. Here also a big cluster of stars, and these stars were a local top. Then we dropped, we got another cluster of stars here at the ultimate volume, and we had a period of sideways. Definitely something to watch out for if you see a cluster of at least 3 or more continuous candles with one of these stars. So far we're still holding on to dear life in that 1800 to 1900 zone. Well, positions, a bit choppy obviously. Longs are very slowly increasing over time. Shorts are all over the place, but all in all nothing crazy like these short positions to watch out for. BTC dominance still going sideways. Ethereum to Bitcoin floating around that moving average there. That's the 200-day moving average. It's up and down and up and down. It's trying to decide what to do there. Doesn't look too bad yet, but you want to get above that, pretty much that 72 cents. And you don't want to get below the 0.066 Satoshi there. Hard to say which way this will flip, so we just have to wait and see on that. Total market cap pretty much equal to Bitcoin. As long as we don't break this low, we're still okay for potential move further. And if we fall below this zone here, then we're definitely in for more pain. And we're back at the wrecking ball, DXY. Quickly looking at the S&P 500, and There was potential weekly divergence, but we didn't pivot here, so we can toss those lines. Would have been very nice though. Going to the daily chart, there's no divergence yet, and that whole move was already negated. We're back at the 100% past the 100% retrace, making a slightly, yesterday even a slightly lower low, and today we have the continuation with pre-market already 0.87% in the red. If we try to find support levels, let's switch to the weekly chart there and quickly hide the drawings. On the weekly, you pretty much see better how bad this one is. We do have a little bit of support here around that 35.90, but yeah, the next support level is probably 33k or 33,100. Mixing up all the numbers today. So this is pretty much the zone of support that we can expect to be. Also on the weekly, we already broke, let's see which one was what. Yeah, we already broke the 200 EMA and we're now going for the 200 SMA. And if we break, there's this support zone quite below it. Keep in mind that's still a 3% drop. So it will be decided in the next weeks which way. If we break through this support zone, then there's a lot of pain ahead, because below there it's pretty much 3200, and after that there's 27. So also the 3k mark, if we break that it's pretty significant there. So hard to be anything but very bearish on these markets. If we want to switch bullish, we have to take out that 43.50 level at least to even consider being a bit bullish. So far this week minus 2.22%. Flipping back to the daily. This Fibonacci can pretty much go. We are even, yeah, we are far below this one. And what's the risk assets are doing? There's no pre-market data for that yet, but yeah, bearish a lot. Even this daily chart, like you hit the SMA, got rejected. We talked about it a few weeks ago. Now we had another rejection on last week of the EMA, and now we're just falling down and trying to break the 200 week simple moving average. Not looking good there. Obviously Bitcoin, we hit that, let's see, yeah, that simple moving average indeed, and that EMA are very close together here. We tried to break up and we got rejected on this bull trap here, like classic bull trap. You got a pump breaking the moving averages, a lot of algorithms and retail traders jump in and you just get completely destroyed there. Well, watching to see what happens around that 18,200 level, at 18,100 to 18,200 level here. That's when things get nasty below that. this major gun line here that has been acting as support a lot of times already currently sits at 1700, 750-ish, and that's this previous low at 17.5676, going all the way back here to June. So while the stock markets already broke below its June low, Bitcoin hasn't, and it's still quite far away. How far away is that June low? Let's take a look. The June low is still 5%, almost 5.45% more to the downside. So looking from that point of view, Bitcoin is actually holding up very nicely compared to the S&P 500 that already broke its June lows. But we all know, no matter how bullish Bitcoin is structurally or fundamentally or market-wise, if the stock markets dump, Bitcoin usually goes with it. But one day it will break away from that and will fulfill its destiny as an inflation hedge against these things. But there's too much speculative money still in Bitcoin that still has not been shaken all out. Lower time frame, the 1 hour. What do we see happening? We had this breakdown below, and we're now probably moving towards a bit lower level still. We see that the Williams R is flipping red again. We do see the momentums. The momentums here, the fast momentum is dropping, slow momentum is dropping, trend strength is also below 0. The 1 hour counts all over the place, so there's no low time frame TD sequential gain. Looking at market hyper, we got the unconfirmed yellow X on the 1 hour, and let's see where the previous one was. Previous one was here on this dump, so yellow axis, dump warnings. Definitely watch out for more downside. VWAP flip below, money flow flip below, true money flow also pretty down, and volume flow, what I'm experimenting with lately. We see crossing its moving average, bouncing from 0 and now breaking 0, so we're definitely in short territory. Minor short here worked out, and this major short there also worked out pretty well. So also the 1 hour is looking for more downside potential there. Switching to gold, it's hitting that 50% retrace from this this multi-year move with the double top at here and there in 20 and in 22. We're now 50% retrace, and that magic number of 1500 is also exactly the Fibonacci golden pocket. It's been historically acting as major action zone, battle zones here. So it does look like Peter Schiff will be crying more and more, because looking at this, if we don't have a major pivot here, maybe we got a little 3.5% rally, but we probably hit our head against that line again, and there's at least 7% more downside potential for gold. I wouldn't short it right now. I'd wait if there's a few trend lines to be made, obviously. If we take the recent highs, it's pretty much parallel there. Oh, I would wait at least to see if we hit that 1690, 1700-ish and get a rejection there. That would be a good place to short. For longs, you can take a bet around that 1500-ish level that we get. If it gets to those levels, dig down into the time frames like 4 hour, 1 hour to look for a nice long entry. But we're pretty much in the middle at the moment with gold, so no long, no short there. Interestingly, the United States Oil Fund, and looking at this Fibonacci from pretty much since December, the major move that ended in a head and shoulder that played out perfectly. We are now bouncing off the Fibonacci golden pocket that was major resistance and support here, and we're now pretty much stabilizing. We are having two bullish harmonics on a very major support level, Fibonacci retrace. I think pretty much the bottom at the moment is 61, but I might wick below it briefly, but don't see that happening. So it will be interesting to see. There's a nice gap here, obviously, and it's pretty likely that we will get a gap fill there. We just look at the recent downtrend. We can fill that gap. So most likely it will at least fill this gap. So nice from the current price. A bit of an indecision candle. There's a nice almost 5% trade to be made on that gap fill, hitting that line there. So I'll be looking for a lower time frame entry. We also hit the daily count 9, so we are in the potential reverse zone, as we can see by the silver background here. Fast momentum is already increasing, slow momentum not yet. Williams R is bending to the upside. Trend strength is showing oversold here with the green. Switching to the 4 hour, also in a potential reverse zone where fast momentum and slow momentum are pivoting to the upside. It's not confirmed yet, so on the 4 hour it's not yet an entry. On the 1 hour it's a bit sideways, so not much of an edge there yet. Momentums have been going up since that 63-ish level, so that played out, this pivot here. Had some divergence on the fast momentum even, but still on the 1 hour a bit sideways. So daily and 4 hour look like bullish things, so we're just waiting for the entry signals here on the 1 hour on US oil, and pretty much you want to break that 66. Maybe if you're a bit aggressive you can enter around 65 for a long, if you are a bit of an aggressive trader and things continue like they do. Would be nice if the Williams R would take that dip to its moving average and then bounce up. That would be a nice entry signal there. Like it did here in this zone, where we also had sideways, slowly up, a last dip where Williams R bounced from its exactly on its moving average, and then we had the move up. So pretty comparable price action there. Where is the bar pattern? So if we just take this little fractal here, you can see we pretty much have the same behavior. Down, bit up, last bit down, and then we pretty much start hitting that descending trend line there. So I'm waiting for R to bounce off that moving average there on the 1 hour. Alright, that's what we had to look at for today. All eyes on DXY and the stock markets and the euro. And Bitcoin is not looking too bad yet. There's still hope on the horizon for Bitcoin there. Alright, thanks for watching. Have a great one. Stay safe out there and see you all on the next one.